Lyft shares moving higher following the quarterly results, and gross bookings now jumping better than expected, 13%. The company also raising its share buyback plan. Joining us right now is Lyft CEO David Risher. Good morning to you, sir. Stock, as we just mentioned, it's up now over 10% on the back of this news. So congratulations to you.
Thank you.
If the chart it's gotten a lot better as the years progressed. Obviously, it wasn't on an overall basis. We can contextualize it. But my question to you is, we talked to Derek Khosrowshahi earlier this week just about the consumer and what they're seeing. It seems like everybody's saying the consumer is much stronger than all of the worries out there. Is that your feeling?
Yeah, similar. I really think that's right. Look, Lyft is a pretty important, part of people's lives every day. We give over 2 million rides. People make, literally billions of dollars on the platform. And services, as you know, tend to do well even in times of uncertainty. So far, we're not seeing anything to worry about. In fact, sort of the opposite. As you said, we've been growing. It's our 16th consecutive growth quarter, which is amazing. Rides are up over 16%. So we're feeling pretty good about what we see.
In terms, though, of what the business looks like longer term, the international piece of it and everything else, how should investors think about that now?
So, I've been in the job for about 2 years now, and my focus from the beginning has been the same, which is customer obsession drives profitable growth. And that's what we've been seeing in the U.S. for now quite a long time. We're, profitable, we're, generating cash and so on and so forth. And we're growing in Canada as well, which is super exciting. We're actually doubled in Canada year on year. So, as you know, when we talked a couple of weeks ago, we've decided to acquire FreeNow, a company overseas. And that helps us kind of diversify, our revenue base. Obviously, it sort of de-risks things and gives us some diversification. I think what works here in the United States is going to work well overseas, and vice versa. We're going to learn a bunch, so hopefully create an even stronger company as a result.
But what's the investment ultimately going to look like, do you think, in terms of just CapEx spending?
Low on CapEx. I mean, we're, an asset-light business. It's kind of amazing, actually. I mean, we have 1.5 million people who drive on the platform, and yet we own almost no cars. We own, very, very light assets. So I actually think from a CapEx perspective, we're super efficient. It's a good business. That's why our cash generation has been, it's over $920 million in the trailing 12 months. So feeling good about it.
Lyft shares are up today sharply, David. They're up year to date as well. But if you're looking over the last year, they're down by about 25%. If you compare that to Uber shares are up 21% over that past period of time. What do you think the market is seeing? And do you what's the difference they're putting on valuation in Uber versus Lyft, and why?
You have to ask the market on that one. I don't know. What I can tell you is, and this is the old Ben Graham quote, that in the short term, the stock market sort of measures, in the long term it weighs. We're really building a company for the long term. And as I say, I've been in the job for a couple of years now, and I've really, really focused on customer obsession, on operational excellence. Our team is stronger than it's ever been. So I think and then the consumer demand is absolutely there. And remember, there are 160 billion rides that people take in the U.S. alone every year in their private cars, and only 3 billion on rideshare platforms. So I think maybe the bigger story is sort of, how new still this industry is and how much growth there is overall, rather than sort of just the competitive dynamic, which I think, day by day, week by week, it's kind of hard to know how that plays.
And David, how important is it just to be in the mobility business versus ultimately in food or other kinds of delivery?
So I'm a big fan of focus. I really am. I think customer obsession works best when you really have a target audience. I'll give you an example. We just launched a feature a couple of days ago called Lyft Silver. It's actually very personal to me. I don't know if you've had the conversation with parents about giving up the car keys, but every time that happens, it doesn't go well, and the world gets a little smaller because, older folks, kind of start to get a little isolated. So we're super excited. This is all about getting older folks out. Right. We've had great early reaction. I'll tell you, I don't get hugged very often as a CEO, but literally a neighbor of mine hugged me yesterday for the feature. So I think, it's because we're obsessing over customers, we're able to do that instead of, focus on other things.
So that leads to the question about autonomy, ultimately, because, in a perfect world, we'd all just get in a car and the car would drive us. How do you think about the competition long-term from Waymo, from Tesla, and to the extent that some of these guys are going to plug into your networks, some may ultimately not. They're going to create their own networks. How does that ultimately play out in your mind?
I think you've described it super well. I think there will be a world, and, let's call it 10 years down the road, where buying a car without autonomous is sort of like buying maybe a manual transmission car. They're fun to drive. I've got one myself. I love it. Zip down, this sort of thing. But most people will find that having other either robots or people drive them is preferable. And so we're working super hard to be the best way for autonomous partners to plug into our network so they can use our fleet management, our demand generation, our marketplace mechanisms. We're actually launching first live in just a couple months in Atlanta with a partner, May Mobility. And we're super excited. Obviously, really early days, but it's absolutely going to be a gigantic opportunity for rideshare platforms, for sure.
We got some headlines I wanted to ask you a little bit about. Engine Capital withdrawing a nomination of candidates for election to Lyft's board, and saying that Lyft's board has taken important steps by committing to significant share repurchasing. Is that what led ultimately to this repurchase announcement?
No, sort of the other way around. We announced a $500 million repurchase at the beginning of the year that the board had authorized. And then looking at the cash generation, as they say, we're generating nearly $1 billion in cash a year. We looked at that again. The board looked at that again and said, you know what, let's increase the authorization to 750. Let's commit to do the 500 over the next 12 months. So that's super good. And we've been engaging with shareholders on this for some time now.